We are back looking at the last variance, which is variable overhead. The standard for variable overhead, again, is based on that 3/4 of an hour, and it's $3. So 3/4 of an hour times 3 gives you $2.25 per unit, but we don't really use that per unit cost. But we can do some variance analysis. Okay. So now we're looking back, we know our actual variable overhead, it was $122,000. Alright. We know what we would budget if we had known we were going to do the actual hours that it took. 41,000 direct labor, 40,100 direct labor is what we actually used. So we can take our $3 times 40,100 to know that, well, if we had known we were going to do 40,100, we would have budgeted how much? 120,300. All right. And how we applied it as we actually went based on our standards was $3 times 39,750, which is our standard hours, based on what we would have applied as we went. And that is equal 3 times 39,750 is equal to 119,250. So now we can figure out the spending variance, which is 122,000 minus 120,300, and that's a 1,700 unfavorable variance. We spent more than we would have budgeted, and 120,300, 119,250. We weren't as efficient, 1,050. So there's your last of your variances. So just memorize those. You don't even have to memorize those little formulas because you can look in your book. It's an open book test. So the thing that makes it hard for people is memorizing all the various formulas that goes with all the different, all these different formulas, but you don't even have to really do that. You can just have that right in front of you while you take your test. Okay, so good luck.